Out of daily bias this morning. As you know, we got some weird news drivers this morning, so I was already kind of playing it decently safe. Um, Basically, just the idea of sidelines today. Just watching it in the morning. So obviously, Trump is speaking, or Trump was speaking at 8:30. He's still yapping around um, at the World Economic Forum. So whatever he says over there, really, in terms of its movement in the market. You can say it's correlated, you can say it's uncorrelated. It really doesn't matter at the end of the day. Price action is price action. Um, so I was looking at originally the sell side down here is kind of all this original accumulation. And if you read through the daily bias, I was typing there. Um, that's what I was originally just looking at. I'm just like, okay, this is just as a current target. And we also had the sell side down here. But as I was zooming out to the 1 hour time frame and watching it on ES and NASDAQ combined, if you look at the 1 hour chart here, notice how since Sunday's open, we haven't had a singular move down that was high quality, right? And if we were bearish, you would expect we would have manipulated into the new week opening gap. So failure to manipulate into the new week opening gap on Monday, Tuesday. Monday, Tuesday also printed very weak in terms of bearish price action, as you see, without really forming any high quality sibis or breakaway gaps in its wake. Right, every single inefficiency that was left, especially this one here, completely filled in and leaving those relative equal highs, and then it comes down and sells off. And same thing here. So as I saw the run from the two previous daily lows, or actually, yeah, just from Tuesday's previous daily low, sell side here. We're also trading inside that 1 hour gap from yesterday, but all of that combined, and then also with the news driver today kind of being used as smoke and mirrors for the actual movement, led me to kind of flip my bias and start looking for longs up to the new week opening gap. But we had some decently clean 5-minute price action. I was watching the 5-minute gap here, seeing if it wanted to be inverted or not. Held it with the candle bodies, came back down into discount, and then closed back above bullishly with a 1-minute change of state delivery there and breakaway gaps being formed and holding the wick of the breaker here. If you want to call it a breaker or not, I guess should be 15-minute gap. So technically, I guess it would be a lower time frame breaker. So after I saw that, decided, okay, this is actually decently clean. Hunted setups inside this breaker, inside of the 949 and 948 candle. And then the 950 candle came down here, immediately rebalanced. And then you have inefficiency starting to hold during the macro time, coming into the previous daily high cluster and then the new week opening gap, which to me is ultimately kind of my target for the week. Or sorry, not for the week, but for today. And I'd also favor if tomorrow and potentially Friday we get a full continuation up and close in either half or potentially all of the new week opening gap, assuming that today, Wednesday, is being put in as the low of the week, and this is a midweek reversal, then a lot of times you see expansion into Friday London close. And as a result, you can kind of see this larger range of price action unfold. So whether the news is good, whether the news is bad, you see how the news driver today is being used effectively as a high impact news driver and almost as a tier 1 news release, almost like CPI, right? It's not just necessarily one instantaneous green candle, which is what I was scared of originally coming into this day, is we were going to have a tariff candle and it shoots up 1,000, like this kind of candle right here, shoots up 500 points or whatever in 1 minute or 10 minutes, like it did in the tariffs in April. But as soon as it was low volatility, that was kind of best case scenario they were talking about yesterday and on Sunday. And then obviously, like I said, as the price action was starting to hold, then that kind of leads me to believe, okay, volatility doesn't really come out of nowhere unless they're speaking something crazy. But I pulled up the World Economic Forum kind of thing there and was just kind of scouting around and reading it on the Forex Factory details. And it doesn't look like it's, he's going to say anything crazy, but I guess him being Trump, you never know, right? So stop losses are still in effect, and obviously you need to be kind of watching slightly like a hawk, just to assume that you don't get slipped or anything, but without kind of like I said, the volatility coming in, that's not too much of a worry for me. I'm not really worried about getting slipped in this case. So that's kind of where my mind's at. And obviously we're just kind of tape reading here. In terms of last manipulation, you have at 9:30 of this one here. So you could use this, giving you your -2, -2.5. And in terms of the daily manipulation, you have this one here, which is giving you into the new week opening gap and also lining up that -4. So areas of interest. And like I said, I'm willing to learn from this week. So this is something that's a bit more new to me in terms of the news drivers here. So, and probably for you as well, because we haven't seen this combination in a while or possibly ever. So it's definitely a weird environment that we're going to go into in 2026 with, all the crazy news drivers that are going to come out. So you need to understand how this market works. It's not going to be a slow paced market. There are going to be days where you see these movements, and not that we look at retail stuff, but don't get caught up in the news, especially about stock stuff, right? Don't look at. I pulled up the economic calendar, and then the first news thing that was right. You know how it shows you like world event news and stuff, right next to the economic calendar. It's like all that stuff is either fear inducing or has nothing to do with your job. Like Tuesday, the S&P and the Nasdaq had its worst day since October. Like, okay, what does that mean? And if you have some sort of emotional attachment to that, or if it stimulates some sort of emotional response, then you need to look into that and kind of introspect, right? But it's like you look at these latest news stories and then really none of them matter, right? So you already know that, but it's a good reminder, healthy reminder as to not get caught up in price action. So as we're trading up here, okay, it's lagging. Let me turn my Wi-Fi off on my phone. All right, hopefully that doesn't lag anymore. I'm at 3,000 ping right now. Let me actually reduce my stream quality here. Okay, I'm gonna stop streaming, and then you're probably gonna just see my name tag. You have to click off of my name tag, and then I'm going to restream at a slightly lower quality here, 30 frames and 1080p. So click off of my name and then click back onto the stream. If I lag again, let me know. But like I said, as we're looking for higher prices, you want to be marking out any, just for tape reading tools, this 15-minute inefficiency here. You can mark out this one as well, but notice how over here on the left side of the curve, in terms of this market maker buy model, this one was used as a sibi. It was used as a selling opportunity there at 1300. And also this one in here, you can see being used, filled in completely, and then trades in a premium there, the inefficiency, and then it retrades completely. So it's a balanced price range. But in terms of price action reading, this is one you'd want to pay attention to. And also could be marking out this one, I guess, as well, but don't want to get too cluttered, right? So on the 1 minute chart, you're going to be watching to see, are there any order blocks being placed within this range? And there's not, right? So you could be marking out this gap, and in a best case scenario, you just see this price action here. It trades into the consequent encroachment, and then it just completely just sends it through. But that isn't completely efficient delivery, which I guess if you're bullish, that's not needed. But in terms of precise, efficient delivery, the last bullish order block in this case was here. And you could cycle time frames if you want to, but you can see on all these time frames, there's nothing else. So we're going to be marking out this order block. But what you want to be watching is preferably inside of an IFVG on a higher time frame like this, how the order blocks are being held and respected, and how it's really just going to be coloring within the lines up and down. And once it leaves and you have a bullish order block, it should not be leaving that range because it's a high probability bullish order block because it's placed within that higher time frame POI, right? So if you can see here, you have a short-term stop sweep, and I'm looking now for a closure through here to assume the retracement is finished. Also notice how the time of the day lines up with our -1 to -1.5, lines up with our fair value gap, lines up with our IFEG, and also lines up with our implied dealing range here from our sell side up to our new week opening gap, right around, if you were to put the previous daily high or the new week opening gap, it's right around that 0.75 range. So if you know what that is, this is something to study or potentially something to look at in terms of a setup, because it's repeating, right? So we should go to the 15-second chart here. You do have a bullish order block here on the 15-second, so I guess it's a little bit more efficiently. You can see how it's efficiently delivered, almost perfectly. Up, down, up, down, up, down, up, down, up, down, just stair stepping all the way up, right? But notice how, although it ran the stops here and tagged into the 15-minute gap plus the 1-minute gap, the displacement here you're seeing, there's not a high quality inefficiency, nor is it holding the bullish order block mean threshold, right? So that's something you would watch to see, okay, it's not respecting mean threshold. You expect another run below this short-term swing low here, right? Because of the idea that inside of an MMXM, a loose, crude depiction there, if I were to mark out the grading or the implied dealing range grading, basically where that SMR is to up to where that buy side or the expected terminus is, if we were to measure this out, order blocks, high probability order blocks especially, but order blocks in general, should be holding around this level. Okay, so preferably below your 75%, but highly below your 50%. Any order blocks that you see should be held aggressively within this range, and even more in the entire of this range, but even more so inside of this lower 50% range. Okay, so if you don't see those being held, it's showing you, okay, there's either some weakness in the market or potentially we're going to retrace or reverse again, and that's something to watch. So even inside of these fractal MMXMs, from just this short-term buy side down to this potential SMR, if I see a bullish order block, especially if there's a gap here and it's not holding, especially mean threshold of that, I'm expecting another retracement or potentially consolidation to form until we see that pattern, in quotation marks there, start to show up. So we would not be surprised then if, if I see this tag into mean threshold, we're going to expect to potentially run another. There you go. Runs down to this, runs the sell side again at 10:10. And also just watch here. Also notice, right, we're still looking at this here. Okay, so how does that want to print? 5-minute looks extremely, extremely healthy. So I'm not too worried about. I want to see this one be left as open as a breakaway gap. The 5-minute, this one also preferably as a breakaway gap, but we have to see how the 15-minute gap is holding. So I'm just going to be watching and see how now it's retracing a bit further into the low end of that 15-minute gap, also into the 1-minute bullish order block that we were talking about before. Also notice all of this, right? So low resistance, consolidation. Also, it's not tagging into any higher time frame bias to the liquidity pool or the -2, -2.5 of our estimated standard deviation. Right? And also look at the time of day that this is being formed at. Is that here at 10 o'clock? Whoops. So at a minimum, technically that's meets the requirements in terms of New York Open reversal, but it's not tagging into our DOLs or our standard deviations, nor is it lining up with the idea that if our week and our day and our session are all lining up with our expected bias, we should see it trade into further DOLs and further DOTs, right? So higher in price and preferably targeting these sort of PD arrays, which you know is going to be on respective time frames of the H1 and H4. So these are ideas that you can kind of use as you're reading price action and things that I'm thinking of as I'm watching it. So, if I'm holding a trade or I'm just reading order flow, this is the things you have to be thinking about, and not where's your stop going to be all the time and where your P&L is, and etc. Right? So if you can think about these things, you put your trade on, you put your stop loss, maybe you move it to break even or whatever. After that point, you should just be thinking, for the entire trade in totality, but also especially once you don't have to do anything with your stop loss, about this kind of stuff here, which is, okay, where are my targets? What can I do in here to potentially mitigate any losing trades or potentially extend my winning trades? Is price action going to continue? And just like how we talked about here, if this is a potential SMR, you have an inefficiency here with a bullish order block. So we're going to be watching to see, does that, you already have a shoot over 50%. So already it's weaker than you would expect because that's still below the implied dealing range, 50%. So you're just going to be watching. Thus you see an immediate response higher and it clears through this SysD, then already you're expecting a retracement to back down again to the order block. There you go, right? So it's closing through that order block. So you're now looking through for this here as your short-term DOL, just for this little run. Maybe it clears it. Let's see. We do have a SysD. So maybe I was wrong. I'm trying to explain. Was there a 30-second gap there or something? No. I don't know. Whoops. I guess you have this bullish order block, but this is low probability, right? There's no gap. No. That's something you'd have to go back and study. I mean, it should come back right for that bullish. Where's that one going to be? It'll be right here. I'm watching it. But also notice how on the 15-minute chart, the 1-minute chart, and on the 15-minute gap, we're starting now to fill in the numbers here of both selling candles all the way down to the discount end. And now we're going to fill it back up with buying candles. So as soon as we clear this and close outside of it, and preferably close outside of this here, you're going to start to see it rip again higher. And you can look now, it's on the 15-minute chart. Are there any impeding PD arrays past this? You have this one here. You could be watching. You can see how it's respecting consequent encroachment there. So a scenario here, which is where I was wrong in reading price action, but it worked out. Okay. So it's risks like this in terms of your tape reading that you want to take in order to improve your tape reading ability, right? So I'm expecting something here. I'm trying to read it. I'm wrong in my analysis in terms of expecting the bullish order block. I'm watching it read here, but then I have to come back in and say, okay, why is it potentially doing this? Because you already have, in this case, a 1-minute change in state delivery out the top end of this, right? As it's respecting the FVG here, plus the volume balance. So as it comes back down into here, it's tagging the discount end of that 15-minute inefficiency, trading back up higher, and then you have breakaway gaps starting to form on the way up, and it's holding bullish PD rays and now holding the bullish order blocks that you see on a 15-second chart, right? So if you want to get better at tape reading, you have to be able to just speak out loud and just say, okay, this is what I'm looking for in price action. Okay, if I'm wrong, then it really shouldn't matter, because what are we doing here? We're sitting at a desk watching candles print for fun. So it really doesn't matter. But as you develop that skill and you say, okay, I'm watching this, then this, then this, and you see, okay, what's right and what's wrong. There's always a reason as to why you're wrong. There's always a reason as to why you're right. So that's the beauty of ICT, and that's why I got into it, which is I actually can figure out what the right answer is. I used to use VPA and SND and all this. I've trade news drivers and stuff, and one day it would work and one day it wouldn't, and there'd be no distinguishment between why I was right or why I was wrong. It was just luck, you know. In this case, ICT is one of the only things that I've come across, or it was the first thing at least that I came across that explained as to why the market moves. And you could go back in after you develop a high understanding of price action and figure out why you were right and figure out why you were wrong. So tape reading is a skill here that requires time and requires understanding um, to master. So marking out these PD arrays and such, and watching them as I call attention to them are the things that my brain is actively choosing to be important. So that 15-minute IVG, this one over here, you can see how it was important, right? Price action came to the low end, held the discount end, traded up through, and you can see how it's leaving this, it's leaving this, and it continues to show its strength towards that cluster of previous daily highs and the new week opening gap. And I talked about also on the 15-second chart, you could see how this clump here, pair with the time, pair with the etc., the DOL not being met, the standard deviation not being met, shows you that a retracement like this at 1010 is potentially a good re-entry opportunity or an entry opportunity if you missed previous ones. So using the combination of understanding both sides of price action and what you're expected to see in the way that I trade is extremely important, because as I develop those reps, I can figure out what price action is supposed to do, what it's not supposed to do. And also, if I'm bullish, I can tell when I'm wrong. Or if I'm bearish, I can tell when I'm wrong. Or if price action is going to be entering into a consolidation, because you don't see stuff like this. This is time and price precision. And for high quality day, that's what you want, right? When you're in a trade, how important is reading the price in a 15-second chart versus 1 minute for honing your skills? Okay, for me personally, it's the same. It's blended together. I'm more so the 1 minute chart is way more important. 15-second chart I've only recently been doing for the past maybe 8 months or so. So I'm still decently new to that compared to the 1 minute chart. And the 1 minute chart to me just makes a lot more sense in terms of the overall session move, because like I said, I've studied it for a lot longer. So when I'm tape reading, the 1 minute is extremely more important. And figuring out like if I'm right or wrong in those little tape reading chunks, you know, then the 1 minute is way more important. Same thing with the 5 minute and things like that. As you zoom out in time frames, there should be a lot more importance you place on those candles. So on the 15-second chart, etc., you know, I can the enjoyment I get from it is just the frequency of the tape reading, the frequency of the PD rays, the frequency of the movements allow me to, you know, get so many more reps in that I get better and better at price action. But it's only until you graduate a certain level that you're even, I would suggest, dropping to such a low time frame like this, because every single candle you look at this is looking to be like a mess, you know. So on a 1 minute chart, that's the time frame I would say the lowest for 99% of people. I'm a bad example. Is the time frame that you should be watching price action on. For most, you know, if you want to win the easiest way and you want to learn price action the easiest, fastest possible way, just watch price action on the 3 minute or the 5 minute. And that is going to be the simplest way to trade price action. But for those who want lower time frames or demand a certain level of precision, then the 1 minute is probably best. 15-second to me is, if I get it wrong, then, you know, it's not a huge deal in terms of honing my skills. What's up, Creed? Missed a major chunk of this tape read. Please post. I will. No problem. Been going for 24 minutes here. Yeah, the 15-second precision is gold if you know, if you're lucky enough to have a high quality day. But yeah, the amount of frequency of setups and yeah, the precision you can get there in terms of stop loss placements and in any move, that's the thing that I like from it. because I realized as I progressed as a trader, um, having an infrequent amount of trade opportunities was something that I could not do. So for me to succeed and through a lot of pain as a result, I wanted to be able to trade multiple different things or understand how to trade multiple different things. Um, so different models, different PD arrays, and ultimately different time frames to master that. Because back in 2023, when ICT released the Cameron's model, I'm not sure if anyone was around by then, but um, that was there. There was a gentleman that I used to speak with out in New York, who, as soon as that model dropped, that guy was profitable. Like, not to say that changing every models or anything is a good idea or it's going to make you profitable, but for him that was like the clicking moment. And ever since then I was like, there's something in there that I want to learn, something I didn't understand. But yeah, anyways, so still kind of in this case holding inefficiencies and whatnot. It's a little more higher resistance, as you can see in this point with the wicks, but not too much to worry about so far. I'm going to remove this one here just for the cleanliness. 5 minute, you have a weak OB plus. Can actually come back down into the lower portion of this 15-minute gap. I wouldn't be opposed to this idea, just based on the 5 minute. So it's okay if it comes back down into here. It's okay if it comes back and sweeps the stop at 1010. But as we watch price action here, you can see the wicks and candle bodies holding this inefficiency. All right, closing above consequent encroachment, and now the wick there tags with discount end is starting to shoot up. So you're looking for a short-term shift in price action, and you can actually go to the 15-second chart, probably see a setup here as we're speaking. And now at this point, there's not really a lot of PD arrays like I saw on the 15-minute chart that's going to oppose us from going from here to here. So you have, what time is it? You have your DOLs and things that you want to be watching for as we continue to trade up. Now we do have this old new week opening gap, and I'm interested in seeing it, but although it's an old new week opening gap, it doesn't really use, at least to me, it's not really used as, I'm using it as a target. I'm more looking at the previous daily highs, liquidity being built in from the current week, and the new week opening gap. So we may see this being used like we saw this one here. I'm expecting it just to completely send it through, given the fact that we've already, it's the most flexible PD array, I guess. But in terms of the current week's price action, it's been pretty efficient in its delivery through there. So there's your 15-second per value gap. See implied dealing range here, 50%. So stop run is allowed in this case. See the reclaim bisi in this case being used there with the candle bodies as well. And you're going to see it just send in the next couple of candles, preferably. Should clear this high with some aggression and continue to form bisis out the top end. So we're watching to see if it wants to give one little final retrace, potentially come back to the swing low here. But then after that point, you don't have a lot of PD rays between this balanced price range, right, and that swing high. So I want to see just completely clear this high and continue to close bullishly and just start limiting up basically for that previous daily high. Immediate rebalance here? Nope. So notice also between that swing high, swing low, what do we talk about with the OBs, right? So this here is not something you should be watching. It shouldn't draw your attention. You should draw your attention to the reclaimed bisi here and this swing low. That's what should be watching. Oh, I guess this swing low as well. I didn't even see that. Yep, I'm looking for the same thing, Creed. Mm-hmm. Looks like it wants to come back and clear those little 15-second stops. Yep, there you go. Can we expect trading back to the 15-minute time frame for value gap? At this point, you're watching to see, does it want to form a 1-minute swing low? If it forms a 1-minute swing low, then you have an intermediate term low here inside of a 1-minute gap, inside the 15-minute gap. Does that? I wouldn't expect it. Right now, it's allowed to do so, but it would be a bit more weak than I would want to at this point. You already have it being traded into, it's already balanced, then it trades into it here with the FEG, then it gives you a SysD at the top with the shift, and it's now starting to hold reclaimed bisis on the way up. I really wouldn't like it to come down here, but it's allowed to until it forms this swing low here. So we're watching the 40 seconds here if it wants to form this swing point. If it does, then at this point, I mean, definitely not to here, but the 15-minute fair value gap also would be a point of interest. Not for an invalidation point, but just something to keep in mind in terms of weaker price action. So it looks like here we're going to get that 1-minute swing. 15 seconds left, and here's the hopefully the limit out of here. Pew! It's got to continue going though. It's got to fly up. So there's your 1-minute swing point, and let's see if the 1-minute 15-second can continue to just boom, 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 all the way to the previous daily high. So this here, immediate rebalance. I want to see if we can use this as a breakaway gap and this one as a breakaway gap. So let's see if it can clear it now. Just playing around there, but let's see the candle body's holding the immediate rebalance. And this is not an immediate rebalance on the 15-second chart. This is an immediate rebalance on a 5-minute or a 15-second, 1-minute chart. The idea there, basically, see, just filling in the numbers there between the, you can count it here if you want to as well. But we should see it clear. I want to see this same candles here continue, and I want to see this being used as a breakaway gap, like I said. So at this point, now I would not like, this is a high quality intermediate term low, right? So this one is an intermediate term low. Whoops. Hello? This is an intermediate term low. This is also an intermediate term low, especially this one, right? So that's a decently high quality stop trim possibility there. Like I said, I do want to see now how we respond to this, but this previous daily high, previous daily high from Tuesday is the first objective, then the Monday objective, then the new week opening gap. And also, what time is it? So this, like I said, I still want to be watching. Is this going to be used as a target? Be Pretty unfortunate, to be honest, if it just tags this and then reverses, but I'm expecting those juicy liquidity pools up there to be tagged. So now we just watch, right? Now we watch. So -2, there's your -2, boom. So that could be a partial opportunity if you wanted it to be. Right, it's inside of higher time frame PD rates, 1030, and it's -2. So technically speaking, that's meets most of our requirements. But since we're looking for the ERL, the IRL up here, that lines up with our current week, then that's what I'm looking for, right? Because think about this, right? If I have a bullish week, or if I have a bullish candle or whatever, if I'm below the open, it needs to go to and past for me to complete that candle, right? So anytime you're using a fractal open, midnight opening price, 930, new week opening gap, all of those are fractal opens, meaning if I'm below that opening price, it should go to it and past it. So when we talk about Wednesday being the low of the week in this case, if we are, which I'm assuming it's going to be, we should go past the new week opening gap, or at least filling in a whole lot of that opening price and the new week opening gap going into Friday London close. So that kind of gives you a bias for Thursday, that gives you a bias for Friday off of a loose no chart perspective. But obviously, as we're trading into a higher time frame gap like that, you kind of have to deal with sometimes some higher resistance or deeper retracements, and that may change your bias or change how the price is delivered throughout that range, right? So beautiful day. Uh, 1 minute chart, last manipulation leg after 930. So I'm deviating technically from the 930 to 11 o'clock. This is just this open New York open MMXM. If you're using the 1 hour, then yes, it's a bit higher, right? Into the new week opening gap. See the new week opening gap, which I think I still have. Yeah, right here. There's your first one. Isn't it lovely? Good PA. Good expansive PA. Holding price action. There's your first limit. Here comes your second one. Bam. Oh, nope. Oh. I'm losing my mind. There you go. And then the new week opening gap. Right? So, you get the idea. I would continue to watch it if he wants the New York opening gap. That's pretty probable target, as you can see just from the price action here. The 1 minute candle closures, and obviously how we're getting through. If we do close through this -2, -2.5, then look for a CE of the New York opening gap. But I'll screenshot this, add it into the. I'm gonna put it in predictions chat to study. Although I didn't put anything today, I apologize if for the tier 1 guys and tier 2 couldn't make it. I'm sorry for not posting anything today as we're tape reading, but that's just something to study. Obviously, in relation to the daily bias that we had from this morning. So, good idea to flip bias, I guess, in this case, and you can see how the 1 minute tape reading hopefully was effective for trimming stop and where to look to get in and where to look to potentially be worried about price action not holding, etc. So, and also as a side note, this type of trading here, at least for me, takes a whole lot of mental capital. So I'm mentally cooked right now, you know, like I do not want to be continuing to tape reading this, like and precisely come into the 15-second chart. So really, like as soon as I get my first partial or first whatever, and I can move to break even, and you know, then at that point it's I'm not watching it like the amount of precision that we're doing in here, right? Yeah, you know, see the original entry, that's fine. I'll pull it up. So original entry was off 949 off of the bullish order block and a 15-second fair value gap. Basically, as soon as they gave me a SysD outside of those PD rays, then that's what I got. So here's the entry here. Just zoom it in so you could see. But let me go back into this so you can see. So this in here, low, high, lower low into the 15-minute fair value gap. So it's not the best breaker in terms of its requirements for sweeping sell side or something like that, but it's into a 15-minute PD ray, so I look at it as a breaker. That low, high, lower low, the wick in this case is what I'm pulling. Technically, you can pull it from this low to this high, but I'm taking the most sensitive area. So the wick, extend that out in time. There's no fair value gaps, so I'm watching to see. I can't just go long off the breaker, right? Or I'm not going to. I'm watching to see, okay, are PD rays going to hold inside of this 1 minute breaker? And also if there are 15-second fair value gaps and such, then that kind of fits the criteria, but not really. So I want to be kind of confirming that it continues to do so. So you get a 15-second gap in this candle, 947 here. Trades into that gap, holds the bullish order block, holds the breaker. As you can see, consequent encroachment of the breaker right there in yellow. And then as it gives me a SysD out the top there, that's what I'm limiting long off of. And then my stop loss in this case was going right here. I believe it was right here, or was at the low end of the breaker. I think it was right here. I'm not actually sure. One of these two. And then taking it all the way up to the previous daily high and the new week opening gap. If you want to see the full entry, then I'll zoom out for you. 15-second chart, you can see it all. Right in here. I actually hit my target, what's it called? Profit target, which I didn't even know I had. So it automatically closed out the trade. So I missed like 2 points there, but it is what it is, right? So, about if you want the calculation, I'll pull up the calculator here. Uh, 5.6 R or so. All right. So, that is my little less than my weekly goal, but high quality setup for you know, a Wednesday, given I wasn't expecting it to be a high probability today as it was, but I'm glad that obviously we showed up and kind of stayed sidelines until it was clean and then decided to jump in. Please keep doing these lives more whenever you have time. Okay. I love to do them. I love to do them. I just only really like doing them when it's like this because then number one, I sound smart, and also just it's a lot easier to just tape read this kind of stuff compared to low probability days. It's I can still do them, but it's a mess. It's a lot harder to number one explain why I'm thinking certain things. Without it being extremely niche for that specific day. So in terms of like general understanding and general teaching, it's a lot harder to do that. But yes, I do like doing these, and obviously you can go back to on my YouTube channel and on my YouTube vids section, any video labeled tape reading or execution or whatever, those are all live execution analyses and tape reading from the 1 minute chart, kind of expecting what it's going to do. And you can see in here, it's actually being very, very nice. And we're going to run onto the new week opening gap. So now's a good time to ask psychological questions if you have any, I guess, right? Time-wise, we can target 11 a.m. at least, right? I would be looking for. So, I mean, in this case, if I know what you're doing, then that's the idea, right? Um, in this case, 10:30 and it tagging into these higher time frame PD arrays. Not to say it won't continue into further time, but these are extremely sensitive premium arrays where deeper retracements are completely allowed, right? So if I were to hold runners into time, I have to consider that possibility first. So if I'm trimming stop or keeping stops tight, I'm probably going to get stopped out. So in terms of time perspective, yes, right? But I guess when we're looking at this from a daily profile perspective, it's already met those requirements. And now it's just kind of extra, right? So that's why I'm looking to take partials aggressively off the previous daily high and the new week opening gap. And then if you want to leave runners till time or till the consequent encroachment of the new week opening gap, then that would be the completed full 100% logic, right? And I know what you're doing there. So preferably, yes, you're correct. When you tape read, how do you stay neutral versus being numb? Um, I mean, I guess they're slightly hand in hand, right? The idea is you're numb to every day's price action, whether you trade, whether you don't trade, or whether you take a loss or a win. What do you mean by staying neutral? Do you mean just in terms of bias, or do you mean kind of sitting out? Damn, we moved 300 points this morning. For almost 400 points. It's nuts. This 40 points right here. No, it's 30 points. Yeah, like I said, if you have any psychological questions about today or in general tape reading, let me know. And hopefully the bias also made sense. I might do a review later today just on the bias. I don't really care to do one for the tape reading stream here. Sorry for the entry and execution. So if you were looking forward to that, then I'll explain as to why I flipped and why I was looking for longs. All right, I got you. I'll probably just do it in the private group here and post it into or I may do it in the public stream, but either way it'll be posted, right? When you're in a trade and you see a big candle against you, emotions kick in. You've talked about being objective and watching candles for the I see. Okay, so um that's a hard topic. It's hard. It's a good question, right? Um let's put it in a different terminology. Okay? One that's better for your brain to understand and one that you can closely relate it to. All right. I'll give you a couple analogies, right? Number one, um, like you said, yeah, you can be numb, right? But I don't think you can be numb, and there's certain things in trading you should be numb about, right? Like P&L and stuff like that, and you really shouldn't have emotion towards those things. And as a trader in general, I think just your ability to become emotionally numb is inevitable. And it sucks sometimes, to be honest, and that's a whole different topic on itself. But I don't think that's the right idea, because as humans, we are subconsciously or evolutionary, whatever you want to say, we're programmed to fear, and we're programmed to um, have these survival responses to things. And trading is one of those things that limits uh, emotional response, right? You have money. Money is closely tied to your survival, and if you don't have money to and food to eat, etc., you die, right? So when things are going against you, or things are scary or fearful, fear-inducing, you have that emotional response. When you're flying in a plane, okay, you're flying in a plane, and let's say it's a nice Emirates plane, and you're going from, let's just say you're going from Miami to New York. I know those Emirates planes don't fly there, but I'm saying here's a nice big plane, right? And it's only a 2-hour flight. Someone who is accustomed to flying and understands the statistics of flying and how planes are built and how there are redundant hydraulic systems and how pilots have to be trained for 10,000 hours, etc. And like I said, the statistics of flying in general. When they are flying and there is slight turbulence or a bump in the road, and they understand that air is just like water and there's waves in it occasionally, they don't freak out, right? They don't have this, they acknowledge it, they experience it, but they understand what's going on. They understand the technicals, they understand the faith and understanding and building and protection that they have, where it almost makes it logically implausible to be scared unless something genuinely is going wrong, right? And they sometimes won't even know that, compared to someone else who doesn't have flying experience or is fear induced from the news and see how many plane crashes there are, or maybe their parents or people around them told them how scary it is, or maybe they were in um a a malfunction or a mechanical error in the past, and all those things produce this scar tissue and produce this fear, right? So it's going to be almost impossible for that person to just simply shut off their emotion. Trading's the same way, right? You can't just simply just shut off your emotion just because I'm not going to think about it. It's possible. It's hardwired into your brain. So unless I remove your amygdala, that's not going to happen. So you have to understand behind the scenes what's going on, and the only way you beat fear is by putting faith in front of it. You have to have faith and belief and understanding and logic to the point where you completely eradicate that fear, not through numbness and not through um, simply not thinking about it, but through logic and reason, to the point where it makes it almost completely illogical and impractical to be scared of something that you shouldn't be of, right? Because it doesn't pose any threat to you, and there's other scenarios where stress it's stress inducing, but really has no attack against your survival, like tests, right? Think about how stressed you are for a math test in the 6th grade, and here you are 30, 40, 50, 60 years later, and did it have anything to do with your survival or how well you were going to do in school? No. So to answer your question, how do you watch price action and be objective in watching it? I have a great amount of faith and understanding and belief and experience in, number one, my stop loss, you know, my risk management system, where even if that stop loss was to go on, I know that no matter what, if I follow my risk, I'll be able to get out of it, and it's inevitable, you know? And I think understanding the market, the technicalities of it, and why price action maybe has to do one of these things, or why it has to retrace and all these other things, um, also eliminates that fear. So the only way that you're going to really be able to do that is by talking yourself through it, you know? So for example, if in this case price action is going to retrace or do something like this, what I'm trying to do here is I'm trying to explain to you the logic as to why it's allowed to do these things. And you're no longer scared about it, right? Or you shouldn't be. You hear me talking about, okay, why it's allowed to do this, or why it's doing this, or even why it's allowed to come back to this order block. And even if I'm wrong, then it's great. You know, even if it comes back down and tags into this fair value gap, what do I have to protect me? You know, and I trust that thing to do its job. That's why I fear slip. You know, so getting slipped is not a joke. That's one of the scariest experiences for me, is like absolute panic where I'm like, I'm supposed to be get out of this trade. That's why you see me like the only times I'll be emotional in my tape rating streams is when I'm not getting filled. You know, when my limit orders are not filling or my stop loss is not filling, and you've seen it in the past, I'm like not emotional about it, but my voice changes and I start, you know, raising my voice and getting a little like antsy, you know, because that's something that I have no control over, you know, and it's scary because at that point you have no control over it. It's up to the market. It's up to your electricity and internet to save you. And you're just sitting there watching it happen. So being slipped is reasonably scary, you know, and reasonably you should fear that and try and avoid that at all costs. But retracements like this, you know, the easiest thing you can do is it takes a lot of conscious effort to do so. And I suggest doing it on a day that you're not actually trading, either through a tape reading stream or just simply you're sitting down, you lock yourself out of your account and you just sit there and watch it. As you watch it and you see these retracements, see if number one you can get the logic as to why it's doing that, you know, and that may be after the day. That's fine. But second part is while it's doing that, remind yourself my bias is bullish. Price action so far has been remaining bullish. At this key time of macro time, it's retracing, or at this X, it is retracing. It is allowed to retrace because price action needs to offer quality entries, and I'm not scared of a retracement because that's what price action is supposed to do, right? And you continue on with any sort of PDRA or problems that you have psychologically that induces these emotional states. And if you do it enough times, it normally subsides, and you don't have to actually write it out anymore, and you can simply just kind of say it, and then it becomes subconscious. You just believe it and you know it, and there's no priming that's needed for you to you know, understand what's going on in the market. So you have a combination of things. You have a combination of trusting my stop loss. I know when my stop loss is there, I pay it. You know, the quote that I say and the quote that I heard before, and it's a very good quote, or it's a piece of injecting logic, really, is I pay my stop loss a damn good amount to do its job properly. You know, that stop loss is on my team. So I don't fear my stop losses, although it's uncomfortable sometimes. I pay him to do to do his job properly. So I trust him. Okay, if I'm in a losing trade, you're going to do your job, right? All right. Okay. Second point is even when I do get stopped out, the silver lining is the fact that every single time I have managed my risk properly, meaning after I take a loss, I cut my risk. After I take a second loss, I cut my risk, etc. I only take good trades. We go back to those 3 bullet points: manage risk, take good trades, avoid losing trades. When I go back to that foundation, I stop thinking about how long it's going to take out a drawdown, stop thinking about payouts, stop thinking about anything monetary related other than my job right now is just stick to this protocol. Every single time I do that, I win over the long term. Every single time I deviated from it because I thought I knew better and I wanted to control the system and get out of the drawdown quicker, or I thought that this is not the best idea to do this, and I take control over it, soon enough, I blow my account. Or soon enough, now I'm deeper in drawdown and I'm like, why didn't I just follow my rules in the first place? You know? So that's the second part. And the third part would be understanding the technicals, right? When you have all 3 of those, I think as a result, it's a lot easier to, when you see one black candle or one green candle against you, you know, sure, it's uncomfortable, right? And there's going to be that initial response. But as a trader, you learn that initial emotional response is there to obviously induce some sort of action. That's what emotions are for, right? They're inducing actions. If you're scared of a bear, you run. You know, if you don't have that fear-inducing thing, you're just going to stand there and wave at it and dap it up. So it's not helpful for your survival. So you have this initial emotional response, and then what you have to do is you wait. You wait. You stop and you wait and you think. Okay. Originally, that's going to take a lot of energy to do. But now you probably can notice that even in things outside of trading, when emotional things happen that stimulate other people's emotional responses, especially you as a guy compared to females, you should be able to see you can slightly just control that response, that impulse, right? Like if you're married, if we have sisters, or if you have you know, anyone in your life that's um, uh, you know, not male, you can probably. And it's not a downside or anything. I'm not, you know, bashing on. I'm just saying there's different emotional responses. and even to things like news events, right? If news events come on, or you hear someone talking about this or that, right? At a certain point, you expect it. At a certain point, it's not inducing to you a fear. Like, any sort of Trump comment or news event you see in the World Economic Forum from today, for example, that shouldn't really be surprising to you. If we invade Greenland, if we invade Russia, if we do any of these things, it should not surprise you, because human nature is human nature and there's nothing new under the sun. But also, you don't even know what's real or not. AI nowadays, and for all you know, they could just be saying that just to get a laugh out of it, and then they're having drinks behind the scenes. You don't know. So long-winded answer, but hopefully that assists you in some manner. But that's kind of the way that I approach it: is you beat fear with faith, and you beat fear with logic. And when you have a combination of those things all kind of working together, it's a lot easier to um, subside those emotions. And you have to understand that those are reasonable responses if you're scared. So you have to remove that fear somehow, right? And understand and trust and have faith and see that these things are here to protect you, and that trading is meant for you to work out if you just submit to it. That's one of the hardest things to do, but trading is meant for you to work out if you just simply submit to trading. Submit to the process of it, submit to how long it's going to take, and submit to the rules that are in place for this game. If you follow those rules, you'll make as much money as you want, wherever you want. And it's great. If you don't, then you're just like the other 95% of the people who cannot do that. And that's perfectly fine. But it really is up to you as to whether or not you succeed in this, right? Exactly. Yep. Metacognition. Yeah. So there's a bunch of different like facets of psychology you can go into. I'm a big believer in biology, and a big believer in um, the mental space of trading, like the Mark Douglas side of beliefs and such. So I'll always suggest Disciplined Trader and Think and Grow Rich. I think two are the best. If I had to just suggest two books for anyone who's trying to make money, especially in trading, those two peak of the list, you know? And then I think anything that you could study and learn about biology, um, as a trader, I think is also extremely, extremely beneficial for you. Um, exactly. Yep. That's right. Not a lot of people can think like this, so that's why you're one of the only few that actually can. I'm gonna download this. I'm gonna read this probably later today. So, um, a lot of bits of information today. So we'll wrap this one up. We've been going for about what, an hour and 10 minutes or so. So hopefully the combination of the tape reading and the analysis and the bias explanation, like I said, we'll do a bias read tomorrow. Later, not bias read. We're gonna do a bias review later today. I'm not going to do a uh, tape reading. I'm not going to do an execution analysis or the full top-down review that I normally do, because there's this. So anyone can come back and watch this again, obviously, as you feel free to. So we'll do the bias review, like I said, and then in terms of tape reading stream, there may be another one tomorrow or Thursday. I'll let you know as usual. And then we'll have a Q&A obviously stream sometime this week, probably on Friday or Saturday. Normal shebang. And then obviously if you have any video lists, ideas, let me know. DMs are still open. I know I answered a couple of those, and like I said, Maddie and Scrappy, if you guys have any comments or problems with those videos, just let me know and I'll redo them or add some things to it. But those are all posted into the models and reviews section of uh, this Discord, right? So there's the morning routine, there's the scalping criteria video, and the stop placement discussion video, all there. All right, so W stream, I appreciate it. Voice notes. I should. I probably will. I probably will like make a compilation of private group psychology motivational type videos like ICT used to make. Um, so you can listen back to those. But yeah, I'll continue to make psychology videos as they as they show up. And like I said, if you have any video ideas, let me know. All right, so pretty high quality day. Finally tagging the new week opening gap, as you can see, and it's starting to use that low end. So like I said, if you're holding runners and stuff, just be mindful as it could come back into 15-minute and 5-minute inefficiencies, as you see all in here. Already, yeah, I feel that. Hey, maybe I'll be convinced. We'll see. Anyways, enjoy the rest of your day. Like I said, I'll post this tape reading stream up later. Sector, I'll send you your video first. So this stream will be uploaded later today, and then the bias review video will be, I'll ping you guys when I do it. All right. So journal. Do not forget that journal. Review. Make sure you do all the things that are necessary to succeed as usual. And I'll talk to you guys very, very soon. Peace.